Hello, everyone, and welcome into CrushTheStreet.com. First interview of the new year. Once again, last year I started off the year in 2018 or 2019. Ending, I recorded it the last day of 2018, roughly, and then first interview of the new year, Trace Mayer, 2019, and here we are in 2020. Excited about the new year. Tomorrow, Proof of Key Days. We got. Today is January 2nd, 2020, Proof of Key Days, January 3rd. A big day for the cryptocurrency community and started by the man himself, Trace Mayer. It's going to be an exciting year. You look at the Bitcoin chart year after year. If you ignore the noise, you ignore the highs, you ignore the lows, it just continues to climb year after year, despite the critics, despite the pundits. Here we are, $7,000 Bitcoin. It's going to be a good year. Trace, thanks for coming on Crush the Street with me once again.
Oh, thanks so much for having me. Glad to be here.
Trace Mayer, of course, of the Bitcoin Knowledge Podcast, someone who's just deep in the space and, again, leader of the Proof of Key Days. So we're going to be talking about that. But before we do, stocks are hitting record highs. This is the first trading day of the year. Dow Jones, S&P 500. I mean, we're hitting all-time intraday highs on stocks. And even the mainstream analysts are starting to get weary about, how long this can go on for. They're talking about earnings that are going to start coming out in earnest here, really needing to be good to backfill these high valuations. So before we get into Bitcoin and gold and kind of some of the things that we want to talk about today, can you comment on the market, Trace?
Well, I think, stuff just keeps getting worse and worse. There's a lot less trust. You look at the $500 billion that the Fed has had to do in emergency liquidity with the repo market. Like, let's just print a bunch of stuff out of thin air again to bail people out. And so I think the message is clear. You want to own stuff they can't print. Why? Because they're going to just keep printing and printing and printing an unlimited amount of their little paper franchises, their little coupons. And whether it's the Fed or the ECB or the Japanese central bank or China for that matter, because China's got the same type of problem, if not even worse, when it comes to the shadow banking system and all of the bad debt that they've got over there. And so Shakespeare's advice, neither borrower nor lender be, that's really where you want to be. You want to be in stuff they can't print. You want to be in stuff that doesn't have counterparty risk. You want to be in stuff where you're just removing the risk between you and your assets. That means getting rid of any third parties that are there, because we can't trust these third parties. And that's why, they're having to print hundreds of billions of dollars out of nothing. I mean, look at the Fed's balance sheet. They try to do a little bit of quantitative tightening, and it almost blows the whole system up. And so they have to loosen and loosen and loosen. Why do you want to own something that is so easily reproduced? Why do you want to own something that's so easy to make more of it? That's why you want stuff that's hard to make more of it. And that's the type of environment we're going into, where you're gonna want to just remove that risk between you and third parties, between you and the types of assets that you have. If they're easy to make more of those assets, why do you want that stuff? Because they're just going to print more of it. So that's kind of my thoughts on all of that.
Trace, can we differentiate between the fiat dollars or fiat currencies around the world and an actual company, a stock, if you will, but a real company that makes money? And, you talked about third-party risks and, the inherent dangers that come about that. And I would assume that you are referring to stocks as well. But are stocks a better place to be in 2020 at these crazy high valuations than, let's say, the US dollar at this point, in your opinion?
I think that's a very difficult question to answer, because obviously stocks, real estate, bonds, currencies, these are all different asset classes. But look at what's happened in terms of the correlation of the prices between all the asset classes. And I think it has a lot to do with the gold price suppression scheme. Central banks, plural, carry gold in the vault and gold out on loan as the same line item. In effect, they're reporting cash and accounts receivable as the same thing. But really what they're doing is they're taking the physical gold and they're leasing it into the market. And that's a very difficult, why would they do this? If you own a lot of something, why run a cartel to suppress the price? And it's because their issue to it's because their power to issue what we use as currency is infinitely more valuable than the price of that portfolio asset. And when they have the ability to issue that, to make more of it, they're able to engage in confiscation through inflation that is a form of taxation without representation and without due process of law. And they're also able to engage in price manipulation of all other asset classes, whether it's stocks, bonds, real estate, whatever it is. And so what we're really looking at is, are stocks and bonds and real estate, are they just becoming extensions of the dollar? Because the president's working group on financial markets and the Financial Oversight Stability Board are engaging in the plunge protection team, basically, the Greenspan put. And so what then, and so what happens when they suppress the price is they're interfering with interest rates. And interest rates, they regulate production over time. And what do you want with a company? You want a company that's going to produce earnings over time, fundamentally. But when you're interfering with the interest rates, you're interfering with the pricing signals and the stuff that we need to know in order to deploy the capital efficiently in companies to then meet consumer demands in the future. And so I guess what I'm saying is that price and value are completely bifurcated currently as a result of this gold price suppression scheme and the interference in the markets by the president's working group on financial markets. They're interfering and manipulating all the prices. And so what's the defense? What's the play in something like this? You have to find something uncorrelated, and you have to find something that they can't print and that they can't just make more of. And then you have to find something that you can actually possess yourself without having any third-party custodians involved. Why? Because the third-party custodians, look at the Dole Foods case, right? 49 million facially valid shares on brokerage statements and 36 million that were authorized. So you had 13 million shares out of 36 million that were completely fake, in that tender offer case that went before the Delaware court. And so, how can you trust anything out there? Look at the Procter & Gamble case, where we have a similar type of problem, especially with corporate governance. And so, with all the naked short selling, with all of the counterparty risk, with custodians that are hypothecating and rehypothecating assets, in some cases pension fund assets, it's just absolutely ridiculous. And so you just have to remove all those layers between you and your assets and just hold the assets yourself. Proof of keys. You got the money or not? And then you have to figure out what assets you can do that with and the costs associated with that.
Trace, I'm going to bring up Warren Buffett. I know you've brought him up in the past and compared returns, and it's been interesting watching you do that, and obviously the spectacular returns that you've been able to see in crypto and specifically Bitcoin. But just to kind of wrap up what we're talking about here in stocks, even a guy like Warren Buffett, his company, Berkshire Hathaway, is sitting on $120 billion. It's just money on the sidelines. Even someone like him is looking around going, things are expensive. I don't know what to do with this cash. And I just wonder, any opinions on what's going on in his head as to what he's waiting for? What does he see happening in front of him, and what might be something he's waiting for to act on, considering the responsibility he has? His company, Berkshire Hathaway, his reputation, all of these things going on. He's sitting on a lot of cash in this environment. And, while many other people are incentivized to go into the stock market because of ultra low interest rates and, trying to chase yield, he's kind of sitting back, content.
Well, the last time we saw this type of behavior, and Berkshire Hathaway loves liquidity. And I love liquidity too. Buffett and I are on very similar pages in that regard. Uh, but last time, he did this 2007, 2008, and what did we have? We had a massive credit contraction, which started the great credit contraction that I wrote a book about and published, over a decade ago. And what happens in the great credit contraction is that capital burrows down the liquidity pyramid into safer and more liquid assets. And so what's Buffett doing? Well, he's, preparing for another massive shock to the financial system in terms of a credit contraction or a credit liquidation cycle, which, Austrian business cycle theory predicts. And, he's been around long enough to know that, these happen on a regular basis because of central banking and fractional reserve banking. And so he's piling up a ton of cash, which his businesses are beautiful and wonderful in their cash generation abilities, especially the insurance with the float. And so he's going to be sitting on these huge piles of cash, and he's going to be able to pull the trigger when everybody else is scrambling to meet margin calls or meet debt payments or other stuff. And so he's going to be able to buy a lot of stuff cheap, which is the position you want to be in. Now, where Buffett and I differ is what's at the tip of the liquidity pyramid? What's the safest and the most liquid asset? Is it US dollars? Is it gold? Or is it something else like Bitcoin? And, we just closed out a decade. Bitcoin was up 9 million%. Like kaboom. That's way more than Berkshire Hathaway's been up. And so, what the market is saying is we're looking for something that is safer and more liquid. And Bitcoin markets are more liquid than ever. Gold markets are hugely liquid, and the gold price is starting to run a little bit, right? And it's hard to move that needle because there's so much capital stored in gold. And Bitcoin's brand new. A lot of people are still learning about it, what it does and everything. But there's tens of billions of dollars of daily liquidity. It's a top 35 currency based on its market cap. It's nobody's liability like gold. It's strictly limited in amount with 21 million, whereas we don't know how much gold is out there. And you can take possession of it very easily by running your own full node and doing your own validation and holding your own private keys, which is something very difficult to do with gold. When the Bundesbank wanted 850 tons of physical gold back from the New York Fed, it took them several years and millions of dollars to move it. All the logistics. Someone just did a Bitcoin transaction a couple weeks ago. They moved $3.7 billion of Bitcoin in a single block for, pennies per transaction. I mean, it's really wild what you're able to get with Bitcoin. And in less than 140 days, Bitcoin is going to have the hardest money ever that the world's ever known. It's going to have a stock to flow ratio higher than gold's. So buckle your seatbelts, because it's on like Donkey Kong. And gold and the dollar have another competitor on the scene with Bitcoin. 7 network effects, world reserve currency status. That's the prize to keep the eye on. And so that's where I kind of differ with Buffett. Otherwise, Buffett, debt's a 4-letter word around Berkshire Hathaway. That's what he said. I don't like debt. Buffett doesn't like debt. I like equity-based stuff. Buffett likes equity-based stuff. I like stuff that generates cash flow. He likes stuff that generates cash flow. He complains about Bitcoin not generating cash flow, but I can sell covered calls, on my Bitcoin. And so I can generate cash flow off of my Bitcoin. And then it's, an issue of what's the hardest money. And he and I differ on gold, and we differ on Bitcoin in our opinions also. But at the end of the day, like 9 million% on the scoreboard. And the entrepreneurs who calculate correctly will have the profits, and those that calculate incorrectly will have the losses. And, Bitcoin's a massive wealth transfer device. And we have to transfer the wealth from places where it's already at, like Berkshire Hathaway. So, I'm kind of grateful that Warren Buffett doesn't like Bitcoin, and that a lot of these other financial players don't like it. Just keep letting that wealth transfer happen, buddy, like all day long.
Trace, Sounds like you had more positive comments to say about Warren Buffett though than Peter Schiff, and we'll leave it there.
Peter Schiff doesn't have any type of a scoreboard that has any points on it. He's just been wrong all the time.
So Trace, Proof of Key Day, the anniversary of the Genesis block, January 3rd. Maybe give us an idea of what last year's Proof of Key Day was like, and what are you anticipating tomorrow to look like?
Yeah, I mean, tomorrow, hopefully people learn and exercise their monetary sovereignty. It's an ability that we have. We have to flex those muscles if we want to keep them strong. Last year, Quadriga CX, Cryptopia, both of them failed, went into liquidation. Users lost hundreds of millions of dollars, or really, they had already lost hundreds of millions of dollars and just hadn't been marked to market yet. So it's a way to kind of put a little pressure on bad actors in the space. But really, it's about exercising your monetary sovereignty, and that's an individual choice and an individual thing that you do. And you learn very quickly who's in charge, because if you hold the private keys, then you're in charge, and if someone else holds the private keys, then they're in charge. And just be in charge. You can run a full node for free. You can hold your own private keys for free. Like, you don't get to do this with other assets like gold or stock certificates. Like, when was the last time you ever took possession of your stock certificate? If you even can. A lot of them have to be held in street name and DTCC and stuff. So, we should avail ourselves of this ability that we have and flex those muscles and claim our monetary sovereignty. And so proofofkeys.com, we walk people through how to do that, because it's really an educational exercise. It's for all the new people in crypto and Bitcoin who haven't figured out how to do this stuff and haven't done their homework. That way, if you get hit with Quadriga CX or Cryptopia in the future, or Mt. Gox, and lose your money, it's your own fault. Why? Because you didn't figure out how to do stuff. There are no bailouts when you're dealing with a really hard sound money like Bitcoin, because you can't just print it out of nothing. So, you need to make sure that if you think you own Bitcoin, you need to make sure you have Bitcoin. And you have to prove the keys to do that. You got to hold them. None of this paper Bitcoin. I don't want any paper Quadriga CX Bitcoin. I don't want any paper Cryptopia Bitcoin. I want real Bitcoin. And my full node is what's going to validate those consensus rules and prove that I have real Bitcoin. So, that's what Proof of Keys is about. And I hope everybody really takes it seriously and exercises, the opportunity on the day. And, it's good practice to do it throughout the year, but I understand trading and lending Bitcoin and all this stuff. There's a time and a place for that to make a little bit of money. But let's all come together on January 3rd, band together and just demand those keys and cause a credit contraction on the hardest money in the world. It's like an intentional, organized, coordinated global bank run on the hardest asset in the world that can't be printed out of nothing. Sounds like fun to me. Like, get out the popcorn.
It's powerful, and it only goes to show how anti-fragile it is and how resilient it is over the years. So Trace, just maybe some final comments here with what we're seeing in Bitcoin $7,000, and maybe the general crypto space. Are we seeing, more and more stress start to go down the pyramid in terms of, other cryptocurrencies, as we are in maybe what many would call a lackluster environment? We're not having that just massive bull run that we've seen in the past. And obviously that's stressful for a lot of the no names out there. So are we starting to see that kind of ramp up? And, what does that say about the overall prognosis, your overall prognosis of Bitcoin going forward here?
Yeah, so crypto winter, we have 4-year cycles. We got spring, summer, fall, winter. We've been in crypto winter for a while. We're actually kind of in crypto spring. A year ago, Bitcoin was $3,200. Now it's $7,200. It's up over 100%. So I don't know this, like, people lackluster environment. Like, what else is up over 100% in the last year, right? But yeah, a lot of these altcoins have really taken a beating. A lot of them just don't have a use case. They don't have liquidity. The Mimblewimble coins have actually done pretty well in 2019, and I think that'll continue going forward, because, anonymity, privacy, fungibility, that's definitely, and scalability, those are all definitely use cases that people need to hire coins for. So the privacy coins, especially those ones, I think have a lot of potential. But 140 days, we have the halving happening, and you go back and look at the previous charts and everything. And anytime you have these big supply shocks, it takes a little while for the market to readjust to a new equilibrium, but we usually see an increase in the price. And Bitcoin's only getting more entrenched. There's only more liquidity happening. We have BAC, CME, all the exchanges. We got tons of volumes and liquidity happening. So Bitcoin's never been healthier, and it's just getting ready to go the next time. And once it starts, remember, it's a Giffen good and a Veblen good. As the price goes up, it actually stimulates demand for it. It's so interesting. Like, nobody wanted to buy Bitcoin when it was $1. Nobody wanted to buy it when it was $200 after it crashed from 1,300, $200. And a couple of years later, it was 20,000, and everybody wanted to buy it. Sure. Like, people are just so interesting. They want to buy it. They don't want to buy it when it's cheap, and they want to buy it when it's expensive. And that's why, I have an indicator called the Mayer multiple, and I didn't come up with it. Preston pitched it of the Investors Podcast, but it's a very helpful tool in being able to kind of look and see, like, when's Bitcoin cheap and when is it expensive relative to its past performance over that 200-day moving average. And so, those are the times to buy, and those are the times to sell with that indicator. And all the other daily noise is just kind of that. It's just daily noise, and not really a lot of reason to be following it. Or I guess you can day trade if you want to, but I don't. But it's hold those private keys, run your own full node, proof of keys, move in and out with the Mayer multiple, perhaps sell some covered calls or sell puts, to play on the volatility of Bitcoin, turn it into a cash flow generator, and otherwise be very safe and conservative with your money, because this environment is crazy. And that's why the Federal Reserve is printing so much money out of thin air and expanding their balance sheet and providing emergency liquidity. Like, why is there always an emergency? Like, why don't we just let all these firms that need help during an emergency, why don't we just let them all fail? Just let them fail. Wouldn't hurt if Goldman Sachs failed and Bank of America failed and Merrill Lynch failed. And, I think it'd actually be great for the economy. Let's build some solid businesses that don't need to have emergencies all the time. And Bitcoin, like, I don't remember the last time there was an emergency. You don't really get emergencies with Bitcoin. It's got solid uptime. Network hasn't had any issues. I think it had a small issue like almost a decade ago in terms of uptime, but otherwise it's just super safe, super secure, super reliable. And every day that goes by, it continues to exist. Kind of like gold, don't have any problems with gold. Gold 10 years ago is the same as gold today. So having that type of reliability, we don't need any emergencies. Like, just let all these firms just let them fail, and get rid of that system that just lurches from one emergency to the next, using it as excuse or cover to print money out of thin air to help special interests. Like, we don't need any of that anymore.
Good sound advice there from the man himself, Trace Mayer. And one thing I would add, you're talking about lackluster performance with Bitcoin, and you even touched on it. I mean, people are driven by moving upwards prices, but we've seen a high in June of this year, of course, and we've been down from there. So the psychology that plays on investors is at this point a little bit negative. So that's where I think that lackluster performance is coming from. I found it interesting that you mentioned Wimble. I know Andy Hoffman, a former precious metals gold bug, someone that was just, a real advocate for precious metals and talking about the cartel and manipulation, is all about cryptocurrency now. I mean, I think he hates gold now. He certainly hates silver.
I love gold. Gold's great. I wish I had my gold cup to drink out of.
Yeah, you had that last time.
I'm traveling right now, so I don't have it with me. TSA might take it. Can't take your crypto.
Trace Mayer, everyone. Trace, if people want to learn more about Proof of Keys, the work you do, please let them know where they can go and what they can expect to find.
Yeah, so proofofkeys.com to learn about that. Bitcoin Knowledge Podcast, bitcoin.kn, and on Twitter at Trace Mayer. So thanks so much for having me. Keep up all the good work.
Thank you so much, Trace. Appreciate you.